Okay, so good morning, everyone. Hopefully, we're now loading up our attendees on our list here at the webinar. Thank you for joining us this morning. This is the Northern Virginia Republican Business Forum, our first virtual webinar. A little background for everybody. NVRBF, or the forum, normally holds breakfasts every month and invites politicians and business leaders from across Northern Virginia, the 4 counties, Prince William, Fairfax, Arlington, and Loudoun, to join us. But now we're all kind of stuck in our places. I'm in my dungeon in the Wright household, and we're bringing you a webinar on the latest navigating the financial packages for small businesses, and we got 2 experts here. My co-chair of NVRBF, Sherry Lynn Laban. She's an attorney at Dunlap, Bennett, and Ludwig, and I've put on the chat, you'll see links to all our backgrounds and also to the NVRBF forum website. Okay, let's kick it off. We'll pass it over to Sherry Lynn. She'll introduce Jen, and then we'll do some questions and or presentations and some questions. And go ahead, Sherry Lynn, it's all yours.
Good morning, everyone. Thanks for being with us. As Ron said, you know, this is part of our new normal. I would love to see you all in person, but right now this is the best that we can do. I know we're all sort of trying to navigate PPP and SBA disaster loans and all of these great resources that are available. And we've got another forum member, Jen Loges, who is the founder and COO of One Degree Capital. She is in the belly of the beast, so to speak, every day, helping her clients, doing webinars, and really sort of educating businesses about all the resources that are available. So what we're going to start out this morning with is just a very brief update and overview of what the latest information available is on the PPP loans and all the other resources that are available. Jen, I'm going to kick it off to you.
Thank you, Sherilyn. And what's funny is, so full disclosure, when we were talking about this and we were setting everything up a couple days ago, looking at how we were going to do this, we were saying, oh, we'll have like a 5 or 10 minute update on, on the latest for Thursday morning. And then April 8th happened and Treasury put out all these new things to say, and they've, even as of a couple of hours ago, some new information has come out. So the quick update might be a little bit longer than we had originally planned on, but I do want to, there is some key information for businesses. We want to be sure to get that out to you and make sure that what applies to you, what doesn't apply to you, and most importantly, what to do about it. So we do want to give a quick overview. I'm going to focus a lot on the payroll protection program because that is the hot button item right now. If you have already applied for your assistance and you have not, it's been processed, if you've applied but it has not yet been processed and you hear some things today that you're like, ooh, I wish I had done it differently, there is still time to do that. If it has already been processed, there's some question about that. So best thing to do is to contact your lender. But there was some guidance that was put out yesterday that does give some more clarity on some of the aspects of this program. Again, this is the payroll protection program. This is where if you're a small business, you get 250% of your average monthly payroll in a 2-year loan at an interest rate of 1%. Provided certain conditions are met, all or some of that amount can be forgiven. We'll get into more detail on that in a bit, but that's the gist of the program. One of the biggest questions is who qualifies, who doesn't qualify? So the best way to put it is these are meant to be small business loans. So generally, if you're a small business, you qualify. It might be easier to say who doesn't qualify for the payroll protection program. So businesses do not qualify for this if they don't meet the small business measurement, meaning if they have over 500 employees, there are exceptions. But generally, if you have over 500 employees, you're typically not eligible. If your tangible net worth of the business is over 15 million, generally you're not eligible. Also, if your average net income after your federal taxes for the past 2 years has averaged over 5 million, typically you're not going to be eligible. There are some exceptions by industry. I know, Sherlyn, we're going to talk about that in a little bit, but that's kind of the nutshell. If you fall outside of those parameters, generally you're not going to be eligible unless you're in a specific industry. There are some other specific exclusions. Financial businesses like lenders, banks, finance companies, factoring companies, they are not eligible to participate in this program. Passive businesses like developers and landlords that do not occupy the buildings are typically not eligible. Life insurance companies are not eligible. Businesses in foreign countries, this has been a huge issue, especially in the DMV area for some people. But if your business is located in a foreign country, you're not going to be eligible. Pyramid or multi-level marketing type businesses are not eligible. Gambling venues, private clubs that limit membership. This could be some, especially in Nova, if you have some gun clubs or range clubs, things like that. If you limit membership, if you're private and you limit membership by something other than capacity, you're typically not going to be eligible. Also, businesses that are engaged in activities that are deemed illegal at either the federal, state, or local level. So if you are a local or state, if you're in a local state or municipality that allows, for example, the sale of marijuana, you would not be eligible for this program because that is still illegal under the federal guidelines. So that's a quick overview of who can't apply. I think Sherlyn, the other thing we wanted to talk about was what's this whole thing with the affiliations? Where's the exception to that? There's been a lot of movement on that in the past couple of days, so I want to make sure to get that information out. I also want to, you'll hear me say over and over again, and people always ask me to put this stuff in writing, and I won't do it. The reason is things are changing too quickly. Today is the morning of Thursday, April 9th. It's 11:30 in the morning. Treasury just put out some new information 2 hours ago. This stuff just changes too quickly to rely on anything in writing. Best bet is to continually monitor Treasury or keep going back to sources like this that will continually bring you updated information. But here's where affiliations stand right now. Affiliation has to do, and the whole reason this is an uproar is what qualifies as a small business. So can you qualify for this or not? Affiliation has to do with owning multiple companies and having to combine the number of employees to see if you still meet that under 500 small business definition, okay? So affiliation is about power and control. Affiliation exists when one business controls or has the power to control another business, or when a third party has the power to control both businesses. That's when you can start to see, okay, there's an affiliation coming up here. Right now, the SBA is saying they're going to look at these on a case-by-case basis. Quite frankly, they're saying that because the situation keeps evolving and they don't have a way to put a blanket rule in place yet because they're still kind of data gathering. Your affiliation standards, meeting that 500 threshold and the revenue thresholds in that is currently waived if you are in an industry that with your NAICS code that starts with 72. That's a big fancy way of saying if you're in the hospitality or restaurant industry, generally you're not going to, you're not going to have to follow this rule. It also doesn't apply to franchises. This is a big thing also for, say McDonald's, under affiliation rules, all of the McDonald's could be all aggregated up, and of course they're going to be larger than 500. But the McDonald's down the street in Tyson's, they're going to be able to just look at that one location. Also, if the affiliation standard is waived, if you are a small business investment company, so SBICs are also waived. So this calls into play, and for some of the businesses here in Nova, this comes into play if you are partially owned by venture capital. And this is where some of the ambiguity is starting to come in. If your company, or if you are partially involved in a venture capital firm where you have multiple businesses that you have equity control over in some capacity, I'm going to plug Sherilyn here, because the best thing to do is to consult with an attorney. You want to make sure that you stay on the right side of this ruling. And the problem is the ruling is changing constantly.
Right.
So if you fall into that category, the best suggestion that I can give you is to consider consulting with your attorney. Don't have one, call Sherilyn. But so that's the whole hoopla regarding affiliations, why there's so much question about it. Again, VCs, the big deal is, some of these venture capital firms, they own a lot of businesses and they're on the boards, they have controlling interest in them. And SBA is coming back and saying, well, you would have to disclose all of those businesses on the application, and we're going to look at and add this all up and see where the control is. Well, that can get out of control very quickly for some tech companies, for example. So that's why the affiliation is something, and it's constantly evolving. These new guidelines just came out yesterday. So keep watching it. If it applies to you, engage your attorney and make sure they stay on top of it for you. Okay. I also want to get into calculations. There's been some talk about calculations. There's been some changes to calculations, even as of yesterday. So this is where if your application hasn't been processed yet, consider pausing. So calculations are going to look at, number one, wages. It's the wages your company paid. The wages includes your benefits and state and local taxes. If you use a PEO, and this has come up a lot of small businesses utilize PEOs for their benefits, and they're like, well, but the W-2s aren't in my name, they're in my PEO's name. Totally fine. If you're using a PEO, your employees are considered your employees, even though your name isn't on the W-2 that they receive. So that is perfectly allowed. The difference is, if you're using an employment agency and you are sourcing your workers through an employment agency, the W-2s are actually coming from the employment agency. That person is an employee of the employment agency, not of you. In that instance, they are not going to count in this calculation and should not be put on there. That's a distinction. A lot of manufacturing places, larger companies utilize these agencies to help offset their cost of HR. In this case, it's going to be something that you're going to have to work around. No 1099s. When this first came out, you were able to treat 1099 workers as employees, which was bizarre because IRS has told us forever that these are two separate, distinct things. Don't ever confuse the two. Then SBA came out and said, it's okay, count them all as one. And now they're saying, it's probably not a good idea. So,
that's one of the questions that was just posted. We primarily have contract employees. Do we qualify and they count as payroll for the purposes of these loans?
For the purposes of this, they do not. Yeah, so you would not count them. Now, that being said, starting on April 10th, those 1099 contractors and sole proprietors are allowed to file for their own payroll protection. Here's the challenge. The next question everyone's going to have is, well, what does that mean? SBA hasn't released anything about that. Right. No one knows what that means. And I get it. It's incredibly frustrating, but the best thing to do is the only thing to do is to wait. If you pay people 1099, you will not be putting them on this calculation. That's what we do know now. 1099s will have their own method of getting relief elsewhere. That hasn't been specified yet exactly how that's going to work. Okay. Income that the owner receives. This has been a big question. I've done these webinars for several weeks now, and there's been a lot of question about, well, I'm an owner of the company, but I don't pay myself W-2. I draw income from out of the profits. How does that work? Right. We just heard yesterday that yes, you are, and I actually have put this in applications and had it approved, so I know it's working. The income to the owner is okay to put on there. Remember though, that you also have to account for the federal taxes that you're paying. So that does have to come off. For example, if you are an owner and you drew $150,000 from your business last year, of course, when you go to the calculation, it's capped out at $100,000. So you're capped at that. But say you had a very profitable business and you paid $120,000 in taxes last year, federal taxes for your business. That has to come out of the 100. It just wiped everything out. So the reality is, for a lot of business owners, if your business is profitable and you are paying a significant number of taxes, the amount that you're paying yourself probably dwarfs what you're paying in federal taxes. It's probably not going to be a benefit. For some smaller companies, this may come into play and actually help them a little bit. Again, it's one of those things you just need to be strategic about it and look, but it is an option that wasn't there before, which is good. There's also some changes to federal taxes, and you heard me allude to that here just a little bit ago. So when this first came out, all the guidance was that the federal taxes, both employee and employer paid federal taxes, had to be excluded from the calculations. Now we're hearing that the previous guidance, they're modifying that, and the SBA has said, and this is in their Q&A that they just released yesterday, so go straight to the source. Payroll costs are not reduced by taxes imposed on an employee, but payroll costs do not include the employer's share of payroll tax. So they are allowing you to, for your calculations, they're saying that you don't have to take out, and this was a big deal because there's some employees that choose to have extra funds drawn to pay for taxes. Their household situation is such that they need some extra funds taken out. And that was on these early calculations, that was really impacting business owners for something that their employee was doing. This is an attempt to correct that. So hopefully this will help with some calculations for people. Some other movement and update has been to calculations, has been as far as the time period, what you can look at for factoring in what your calculation is. So I said at the beginning, this is based on your average monthly payroll is what they're doing. So 2.5 times your average monthly payroll. They've moved a lot on what they consider your average monthly payroll and how you're able to calculate that. Here's where it is today. Today you have some options. You can look at your 2019 calendar year. You could also look at the preceding 12 months, which would mean you'd go from April 1st of 2019 and then for 12 months after that. If you're a newer business, you didn't have payroll through all of last year, so doing either one of those would artificially reduce your numbers. You can look at just January and February of 2020. Also, if you're a seasonal business, there are some specific dates that they'll look at. It gets a little complicated on that one, but if you're seasonal, know that there's a specific calculation for you. But this is great. Look, 2019 was awesome for a lot of businesses, so they had growth. So for some businesses, if you're looking at just 2019, that Q1 of 2019 doesn't look as good as Q1 of 2020. This gives you some options and some flexibility to be able to have better numbers and a better representation of where your payroll is now regarding the calculations. So that should help and should play in a lot of businesses' favor. Other big thing on this is the headcount calculation. There's been a lot of questions about this. They're looking at, when they're doing the calculation, it's the number of employees as of February 15th is the standard calculation. Now, for some businesses, they have a lot of turnover. So they recognize this. They've come out with some additional guidance, again, just as of yesterday. If you have a lot of turnover, you can use the average number of employees per pay period for whatever time period you used in the calculation. So again, if you go back to your calendar year 2019 example, you can look and say, well, I had on average 15 employees or whatever the number is, versus looking at 2019 when you had 20 people on payroll. That 20 is not an accurate representation of your business because you only had really 15 of them at a time. You had people coming and going. This is an attempt to correct that. Keep in mind, so they're looking at those numbers, but that's a while ago. Then March happened and some people have already laid people off. If you've laid them off, you do have some options, and you're incentivized in this to bring them back on and to get your payroll up to where it was. So do keep in mind though, that those are the calculations they're going to be looking at to see on the forgiveness piece, to see if you meet that condition of, have you kept your full payroll? those are the numbers they're looking at. They're
Right.
not looking at the numbers as of the date that you closed, that you close on the loan, which may be, you may not even be open right now. So you may have laid everybody off. They're going to expect you to bring people back. That's the whole point of getting you the loan. This is one of those parts where you want to be strategic on when you apply for the loan, because that timing could impact the amount that you're able to get forgiven. Okay. One other big change that's happened this week and just came out with guidance yesterday is, whose responsibility is it to make sure that this information is accurate?
Right.
It's been a big pushback back and forth between SBA and the banks. The biggest challenge was SBA and Treasury and everyone is, move. Let's get the money out there. Let's get people not getting laid off. So there was this huge push of get the money out there. The banks, on the other hand, were saying, wait a minute, you're telling us to get the money out there. There's no personal guarantees. There's no liens on the businesses. How do we control fraud? And quite frankly, the government came back and said, well, you control the fraud. You just have to know. So it was a bit of a back and forth pull of, okay, you can't, where's the blame if something goes wrong? Because something will go wrong. Something going into implementation this fast, this is going to go wrong at some point. So what they've come out with just yesterday is the application that you're signing has you're attesting to certain certifications on there. You as the borrower are the one who is ultimately responsible for making sure that your payroll calculations and your numbers are correct. So you're going to turn in your calculations, you're going to turn in your tax records and that to the bank. They're going to look at it and make sure that you've made a good faith effort to, they're going to make sure that you have everything there and that you're saying, yes, I've really looked at this. These are my numbers. But they're not going to go and replicate those for you and basically check your homework and make sure that you did your calculations correct. The onus is on you as the borrower. That's a big consideration to keep in mind. If your numbers are correct, if your numbers are incorrect and they later determined that you kind of knew they were incorrect, but you sent it in anyway, that's committing fraud against a federal agency. And that has some significant teeth to it. You can go back and Google some news reports from after 2008 to see exactly what those consequences might be, but they're big consequences. Bottom line, make sure your numbers are correct. Don't do it in a rush and throw it in thinking, oh, I'll fix it later. That can be disastrous. Similar for the affiliate stuff that we were talking about earlier. The borrower is responsible for attesting to their affiliate compliance. You have to know what it is. You have to tell the bank and sign off saying, I know the rules, I'm following the rules, trust me. You need to make sure that that statement is correct. Best to consult with an attorney, okay? A couple of other quick things just before we kind of open up to Q&A. Be very careful about double dipping. There's a lot of programs out there, and what you don't want to do is apply for the payroll protection and then say you're doing your disaster loan application and you're going to use your payroll figures from the same time period that you're getting the payroll protection funds. You can't do that. Similarly, there's some stuff going on with different well-intentioned programs not playing well together. For example, just starting this week, a lot of the payroll paycheck supply companies or paycheck processors have started to make it really easy for you to just click a button that says, please defer my Social Security tax payments until 2021 and 2022. If you click that button, you are ineligible for loan forgiveness under payroll protection. Don't click the button.
I want to repeat that.
Yeah, this is big. So there's an option, and this came out about a month ago, I guess. There's an option that came out that you can defer the Social Security payments that you as the employer are supposed to be paying. You can opt to defer that for the rest of 2020 and not pay it until they're dividing it up into two payments. Payment one, they would calculate up what you would owe. First half would be due on December 31st of 2021. Second half would be due on December 31st of 2022. Not a bad deal, except if you're planning to ask for forgiveness from the Paycheck Protection Program. Doing that makes you ineligible. Why? Because it was written into the act that way. It's just starting to get some light. There's some of the senators are realizing that that was in there, going, hey, wait a minute. So that could change, but it takes a lot of jumping up and down and hollering to get those things to change. So this is the part where we suggest to you be constantly calling your congressmen, your senators, be on the phone with them, tell them how these things are impacting you. They don't know what they don't know. So if these types of things are impacting your business, let them know. Similarly, there's also the paid sick leave refundable credit. So if you have employees that are on the paid sick leave because related to COVID-19, there is a tax credit that will be available. You also cannot double dip those. So you can't get funds under the Payroll Protection Program and take that tax credit. So just be very careful. Again, there's a lot of strategy involved with this. Be very careful as you're going through this. Other quick things on use of funds. Be very careful also. At least 75% of the funds that you receive has to go to payroll. The rest can go to rent, utilities, interest on loans that you had prior to February 15th, nothing brand new. So those are acceptable uses of the funds as long as 75% is used for payroll. One tip that we are suggesting to our clients and to everyone is when you get these funds, put it in a separate account and draw from that for the specified acceptable use items only. That will help you immeasurably when it comes to the calculation piece of what amount of this loan can be forgiven. If you have it set aside, you're only drawing from it for those approved activities, that will make you leaps and bounds ahead of everyone else when it comes to the calculation piece of this. If you are tempted to use these funds for something else, say you
be tempted.
you
Don't be tempted.
Yeah, you get the funds, you're like, I got some left over. Or you have that 8-week period and you do your loan forgiveness and you didn't get it all forgiven. You still got some money left over. So you're carrying it off into the 2 years and you're looking at it going, I could actually buy something with that. I could go do something else with that. Do not do that.
Right.
What you are attesting to when you sign on the loan is that the whole amount of that fund, the whole amount of the amount that you're getting is to be used for these acceptable use purposes. So only payroll, only rent, only utilities, only prior interest on prior loans. Anything outside of that is not allowed. You could be criminally liable, and you would have to pay the funds back.
Pay the money back.
SBA. Yes. Be very, very careful of that. This is just, again, that's another suggestion of keep it in a separate account. Know that that is special purpose funds. Use it only for those special purposes that they're allowed for, and that'll keep you out of trouble. The forgiveness calculation, there's not much being said on this topic yet. There's what little is out there I'm going to share with you, but again, this is something, one of the reasons we timestamp these, so April 9th, this is what we know so far. A couple things that have happened, SBA came out yesterday and told the banks that funds are to be dispersed within 10 days of loan approval. Originally, they said 5 days, and the bank said that is completely impossible. So they came back and said, okay, but you have to give it out within 10 days. This comes into play with where you want to start to have a little bit of strategy, knowing where your payrolls fall, because the calculation period starts the day of your closing. So they're looking then, your 8-week period starts the day of closing, the day you receive the funds. Then for the next 8 weeks is that calculation they call it your covered period. So think about where your payroll falls in that. You're not going to have a lot of latitude. We have had some clients who, they want to apply now, but they don't necessarily want to get the funds for another month when they have an option to bring people back, that kind of thing. Right now, you're not going to be able to be that strategic about it. Know that going in, and maybe consider not applying right now. Maintaining your head count, we kind of talked about, just making sure I covered everything. We talked about that. You really, really want to make sure that you're strategic on when you're taking these funds. So I think, and more will be revealed about the loan forgiveness piece. Document everything is the biggest thing that we can suggest to you. Again, having that separate account is very helpful. When you pay your rent, make sure that you have receipts for that. Show proof that those were paid. Keep that all together when you get to the loan forgiveness part. That will help you immeasurably. It is, what we do know is, it is going to be, the onus will be on the borrower to show what they used the funds for, to ask their borrower, to ask their lender for the forgiveness, and then for that forgiveness to be granted. That is a process. Numbers floating around as far as when that process, how long it will take. As of yesterday, the latest I heard was they were talking about 30 days for the bank to review, and then 60 days for the SBA to review. That got tremendous pushback. So look for that to develop. That's what they're talking about now. They've not even, that's all been in conferences and meetings. They've not put any guidance in writing because they're still sorting through it. So look for that to change. Okay, and what other options are out there? Just real quick, we've got the disaster loan program. This is a little bit of confusion on the $10,000 grant. $10,000 grant and the disaster loan program are the same thing. So if you previously applied, we had some of our clients applied mid-March for the disaster loan program right when it came out. And then a couple weeks later, they came out with this, well, if you apply, you can get a $10,000 advance. And the instruction was apply again. So you didn't apply for two separate programs. It's still the same. The $10,000, I checked this morning, everything from chatter this morning, no one has gotten this yet. It was supposed to be dispersed. The rule was it was supposed to be dispersed within 3 days of requesting it. Then that got changed to 10 days, and now it got changed to indefinite. There was a Wall Street Journal article about this morning. They repeatedly tried to get anyone to comment on the timing, and no one would. So there's also some question about what the calculation is. All they ever said was $10,000. It looks like they're starting to move on that maybe it's not $10,000 to everyone. It's going to, one thing I heard yesterday was it could be related to headcount. Again, there's nothing in writing on it, meaning they don't have official guidance on it yet, and everyone is still waiting. There's also a lot of local grant programs, and this is the challenge with these. And I won't get into even ones I've heard of. The challenge with these is almost as fast as they go up, they get filled.
There's no money.
There's just everybody looking for everything. The best thing I would suggest, whatever hyper local area you're in, if it's DC, even by neighborhood, if it's Northern Virginia, look in your specific. There's the Northern Virginia Chamber, but then there are still some local chambers. Some of them are doing a great job of keeping track of when these grants come out. Take a look at those websites, follow those. Maybe have it as part of your morning coffee routine to check those websites, see what's out there. If it applies to you, don't wait, apply. Keep your financials handy. Make sure that you have updated financials. You don't know what any of these are going to ask for. Generally, they're going to want to know some information about your business. So it is good to make sure you keep your financials, keep everything updated. Facebook grants has been a lot of things that we've heard about as well. A lot of people are asking us about this. Facebook has a specific page for it. I can we can put that up there. The DC region, it is by region, so it's only where Facebook has a physical presence, and DC is eligible. Right now, you just go on the site and enter your email address in, and they're like, we'll get back to you. So the program is not up and running yet, but it is something that could be worth putting out. Last thing is larger businesses. If you don't qualify by size or for whatever other reason you do not qualify, there are some other, under the CARES Act, there are some other provisions. The Main Street Lending Program is for mid-sized businesses. That's for businesses that have up to, so over 500, but up to 10,000 employees, up to 2.5 billion in annual revenue. That Treasury just announced a couple of hours ago. They did actually do an equity investment and injection of funds into that program. So they had put it out in the CARES Act, but there was no funding for it. They just committed to the funding dollars this morning. So look for more of that. Look for more information on that to evolve. That comes out of the Fed. So look for that more to evolve later. There's also the municipal liquidity facility. Probably not going to apply to you all, except this is something that you want to know for wherever your business is located. A lot of counties right now are deferring taxes, your BPOL tax, those types of things. This is meant as a stopgap measure to help those municipalities keep their funding while they're deferring the taxes that would be due from their citizens or their businesses. So if you're in an area that hasn't deferred BPOL or deferred other taxes, this could be a way for you to pressure them to act, to do something to help your business, because now they have a mechanism where they can still get funds as well.
That's good. Yeah.
That's the latest.
Yeah.
Yeah. That's quite a briefing.
It is quite an update. Should we go into Q&A now, Ron?
If anybody has any, please
Yes,
post them up on either the
chat or the Q&A. You're welcome to use either interface.
Let me make a couple points also that on Facebook, on the forum Facebook page, we're posting any information we find on Virginia funding. And there's also the announcement this week of Pete Snyder put a group of folks together called Virginia 30-Day Fund. It's meant to be a bridge between a small bridge for those waiting for their federal funds. And you can go to VA30dayfund.com and get more information from Pete and what they're doing. And they've processed pretty quickly. Just after they announced, I think I saw on Twitter today that Pete had already processed 23 approval of grants to folks.
And let me add this. Our law firm, Dunlap, Bennett and Ludwig, that's dbllawyers.com. We have a whole COVID-19 section, and which basically I've been putting together, and along with our marketing team. And what we post, along with Jen's videos that she does, her updates, I post those, and also I post the latest guidance that comes from Treasury, SBA. So the guidance that came out yesterday, that is up on our COVID-19 section, because what I tell all of our clients is we want you to have the most updated information, because the guidance and legal advice I give, I go straight from the source. I don't want I'll do the interpretation, I'll help you interpret, but I want you to be able to have access to the rules as well. And as Jen suggested, that might be part of, a good practice to start as part of your coffee routine. It's part of mine every morning. I look at that guidance to see what has been updated, because the situation is so fluid. Really, in order to keep up, you've got to be looking at these sources. It's treasury.gov and it's going to be sba.gov, and they are going to continue to update guidance, particularly on the affiliations and also on the loan forgiveness, because the juries are definitely still out on those issues, amongst others. But to me, the affiliations and the loan forgiveness are issues that, we still need to see the devil in the details on those two points.
Now, have either one of you two seen anything about the next tranche of legislation that's coming through Congress now?
Yes, I've been following it, and as we discussed offline, there is a sort of stalemate now over the additional things, I call them the Scooby snacks, that certain members of the Senate want to put in this bill, where some other factions really want it to focus strictly on supporting small businesses. So that seems to be where the stalemate is at this point.
I think one of the challenges too, and I've been kind of following that in the news as well. I think one of the challenges too brings up the point of, be sure to know when most of the time you're going to have to go to the bank where you have your business relationship already to be able to apply for these payroll protection loans. there is a difference between banks that are accepting applications and processing applications.
Right.
Not all banks are actually processing these as of
Right.
yet. Some banks are taking the tact of they want to have the full and complete guidance before they do anything,
Right.
because
Right.
they want to know the whole story.
Right.
There are other banks who operate on the kind of philosophy that we have around here is sometimes 80% is enough. Make an educated decision and go.
Right.
And that's, so there are banks who are going that route. There are also some fintech companies that you're seeing out there online that are talking about the thousands of applications that they have received. Keep in mind, they have not gone through and sorry, they have not.
Yeah. Go ahead. Go ahead.
I love it when Zoom all of a sudden puts something up going, hey, pay attention to me. I'm like, I don't want to. Sorry, the joys of being live.
Right. We have a question, Jen.
Yeah.
Question. I'm a small landlord, have 4 small business tenants. Do they need to pay the rent to get loan forgiveness?
That's a great question. So if they are, when it comes to the calculation side for the loan forgiveness piece of it, if they're expecting, if they paid $5,000, if their rent is $5,000, they would actually have to pay and show a receipt that they paid that $5,000 in rent in order to have that portion of the loan forgiven. If they took a loan for the money and for that purpose and then didn't use it for that purpose, they're not going to get forgiven for it. So no, they would actually need to be, it's actual expenses incurred during that 8-week period.
Right. Next question. Are there any programs for vacation rental owners?
Not that I'm personally aware of, because they're focused on businesses. And I do know, like under the payroll protection, when it talks about passive ownership of properties, you do need to be the owner occupant of a property. So it wouldn't apply under any of the business loans that I'm aware of. That being said, that doesn't mean that there's not another program out there that's focused on that type of an asset. It's just not something that we focus on.
Keep the questions coming. We've got probably about 10 more minutes, so feel free to fire away with more questions.
You know, one question that I actually was speaking to a business owner this morning, and the question came up about timing. And I've alluded to this before in some of the things we were talking about, but everyone out there, and especially if you look on LinkedIn, you talk to any banker, and my gosh, they almost sound like used car salesmen. You know, come, act now, this won't last. While that may be true, that doesn't mean that you need to just fire and go and not stop and think about this. There is, as we talked a little bit about timing and things like that, there are considerations to be made. The certifications that you have to attest to in this, you do want to make sure that you're able to attest to those and think about those and think about the consequences to your business. So I would say best advice that we can give is pause. Think about it, look strategically at your cash flow needs for the next 90 days and see how this as a tool would fit into it.
There's another question. I'll jump in while Sherry Lynn's off.
Yeah.
Would the $10,000 grant be available for a commercial building owner where some tenants have asked to defer rent?
There is not much guidance on the disaster loan side. So that's outside of the payroll protection. That is specifically the SBA's disaster loan program.
Mm-hmm.
They have not issued much guidance, and since payroll protection came out, they've almost not talked about it at all. So it's so the suggestion would be to go ahead and apply. if ultimately, what they have said about the disaster loan is if you apply for the disaster loan program, you ask for that $10,000 grant to begin with, and you are ultimately declined for the disaster loan program because you don't meet the eligibility requirements, you don't have to give that money back. Again, that's just for that $10,000 advance. So
Right.
it could be in your interest to apply for it. Again, every situation is unique, but it is something to look at strategically of, would that help you right now, knowing
Right.
that you don't have to pay it back if you're declined.
Next question, is the payroll paid during the 8-week period calculated in the aggregate or employee specific?
Oh, good question. It is, for that, it is in the aggregate. So you can have turnover. What they're looking at the end of that 8-week period is the head count number and your total spent on payroll. And again, including, you know, the fringe benefits and that. So as long as those totals meet your target number, which you'll know at closing what your target number is. As long as you're within that, you're good. If Jane left and Joe came in, that's totally fine.
Another question, and I think this is a very good one. What would you recommend to the gig workers who get 1099s and are getting less income?
Yeah, and this is a big, you're right, this is a big question. And there's not, I hate to sound like a broken record, there's not guidance on it. SBA has said that 1099 workers, the gig economy, they've always said since they started CARES Act, they want this to be inclusive of those workers. They haven't yet said how, other than to say that starting April 10th, 1099 workers and sole proprietors will be able to apply for the payroll protection program, but there's no guidance on what they need to do.
Right. And there's no application available either. So
that's a big unknown. I would look for movement on that in some fashion today. I would not be surprised. I would not be surprised if the movement on it is a delay in the date. There's been no conversation anywhere about what that piece of the program is going to look like.
So keep tracking the website, the SBA website.
Yes.
Yeah.
Next question. If an employee quits early in the 8-week period, how does that impact the loan forgiveness?
It does impact it. If the employee is not replaced, yes, it does. It's an unfortunate consequence of it. Your head count and your total payroll needs to stay the same. And I say the same. There's a percentage, you stay within a target percentage, but in general the same.
Okay. Does a reduction in head count and a reduction in payroll result in a double reduction?
You have to meet both standards. So if it wouldn't result in a double, and they haven't yet said on the forgiveness side exactly how they're calculating it. So they do say that it would be reduced if either of those things happened. They have not said by what amount, and that would remain to be seen. I would look for some more clarification on that. Unfortunately, it's probably not going to be for a couple of weeks yet, as they're still trying to get clarification on how to even get the loans.
Here's another great question. If the business has furloughed employees after applying for the PPP loan and then has to hire them back if they're available, that may take time. How does that dovetail with the 8-week payroll period?
It dovetails poorly. The 8-week period, the 8-week period starts the day of closing. Again, this is another, be strategic.
Right. Ron, is that all that we have for now?
Yeah, that's a lot of questions we've had.
That's a lot.
And
it's a lot to take in, yeah.
Yeah. Jen, we'll be posting this on our YouTube channel, on Facebook, on all our social media, Twitter, Instagram connections. We'll also be sending it out in our newsletters. So if you missed taking the notes, we'll be having this video of the webinar available to everyone, and we'll send out the links. What else? Last, anything? Final words, folks?
No, I think thank you both for having me. If anyone wants to kind of keep posted on what we're doing, best way to do that, we're putting everything out on LinkedIn. You can go to our website, onedegreecapital.com, and click on resources. That'll have our blog. But we are also putting a lot of information out there on LinkedIn. So just follow me, Jen Logis, on LinkedIn.
All right. Sherry Lynn, you mentioned at dbllawyers.com. And
Right.
so nobody has time, and we don't have to read sports scores in the morning, paper longer. Let's just read about the SBA loans and programs and all that thing. Thank you, everyone, for attending.
Thank you, everyone.
Thank you
for being
support.
here.
Thank you.
Bye now.
Bye-bye.
Bye-bye.